Do you own property in Texas? Would you like to reduce your property taxes? I served last year on the appraisal review board for Travis County. I'm not a real estate agent. I'm not a real estate professional. I'm not a lawyer, and I'm not a tax agent. But I learned what works in reducing taxes from the time that I did spend on the appraisal review board as a volunteer. I heard hundreds of protests for both residential and commercial properties, and I'm happy to tell you that most protesters got a reduction in their property valuation that reduced their tax bill. In this video, I will share with you how to reduce your property taxes by applying for exemptions, and in the second video, I'll show you how to reduce your property taxes through a protest. Now, this video is only going to cover some of the exemptions available to you in the state of Texas, and they're the most popular ones. There are other exemptions that you can look into for your particular type of property, whether it's agricultural, business, or your personal homestead. Property values are escalating. Last year in my neighborhood, property valuations increased by about 50%. This raised the property tax assessments and the property tax bills for everyone. People were really upset and didn't know what to do, so that's why I created this video to help you get started. It may not answer every question that you have, but it should get you pointed in the right direction. Now, the first thing you're going to get in April of every year is something like this. It's a notice of appraised value. This happens to be for 2020 for my property. Every year, the tax appraisal district is going to send you this notice, and that's going to tell you what they've appraised your property at. Reference material that you might want to refer to get more information are the Texas Property Tax Code. It's published every year by Glenn Hager, who is the comptroller of the state of Texas. And you can also go to the Texas Comptroller's website. It's comptroller.texas.gov, or go to your local county appraisal district website, which is usually something like your county name, cad.org. So in my county, I live in Travis, it's traviscad.org. And then your notice of appraised value, that's going to tell you what the county thinks the market value of your property is, and then which exemptions you apply for. The next thing I want to cover is how your taxes are determined. You start with your market value of your property. That's what a willing buyer would pay a willing seller, you, for your property. You subtract from that then any exemptions that you are qualified for, and that gives you your assessed value. The assessed value times the tax rate is equal to the property tax. The tax rate is set by your elected officials in your county, in your city, and in the education districts that you reside in. So it could be your local school district, it could be also community college district. So the tax rate is something we can't change directly. We have to elect new officials and explain to them that we'd like them to reduce our tax rate. But we can affect our market value and our exemptions. Exemptions you affect by applying for exemptions, and you notify the county appraisal district that you want to receive an exemption. They'll evaluate that, and if you meet all the requirements, they'll grant you that exemption. That reduces your market value. The second thing you can do is you can protest your market value. You can say it wasn't fair, or it wasn't equitable. I'm going to cover that in the second part of this video, a separate video just on protest. In this video, I'm going to go over exemptions. An exemption reduces your property's assessed value. The assessed value is the market value minus the exemptions. So what an exemption does is it exempts some portion of your property from taxation. In Texas, some of the frequently used exemptions are, first off, the most popular is the homestead exemption. What does it do? It reduces your assessed valuation. It puts a cap on the assessed valuation of 10%, and that's the most it can increase in any year once you've received the homestead exemption. So this is something that's available to every property owner that is living in a dwelling on the property. So it applies to your personal residence. But wait, there's more. If you have adjacent property, so you own a 10-acre plot with your house or your mobile home on it, and you've got another 10-acre plot that's adjacent, separate property, but as long as they're touching, that also qualifies. It applies to all your adjacent property up to 20 acres. So it can't go above 20 acres. You couldn't have like a 500-acre ranch with a homestead exemption for all 500. You would have to have 20 acres of homestead. The remaining 480 could probably qualify as an agricultural exemption. I'll cover that later. You get one exemption per owner. So if you own several properties with several houses, it's the one that you live in most of the time that is going to qualify for that homestead exemption. It is effective as of January 1st in the year that it's claimed. So if I claim one by April 30th, 2023, it will apply to my 2023 tax year starting January 1st. Now, it's important to know that all properties get their market value appraisal as of January 1st of the tax year. So in 2022, it's whatever the county said your property was worth on the market as of January 1st, 2022, and you'll pay those taxes in 2023. Usually you have to pay them before February of 2023. There's a deadline, and you'll need to check your tax notice to see what that deadline is for you. To apply for your homestead exemption, you just get the form online from your county appraisal district. You fill it out and mail it in to them, and you apply by April 30th for the tax year. Everybody qualifies for a homestead exemption. You don't need to refile it every year unless there's a new recording to your deed. So sometimes due to a death in the family or a divorce, you want to go change the deed. When you do that, they throw out all the exemptions because to the county appraisal district, it looks like a change of ownership. But if, let's say it was a death, your spouse dies, there was a homestead exemption before, you can reapply and reinstate the same homestead exemption if you're the surviving spouse, even if you aren't over age 65 or whatever. You can still qualify for any of those exemptions that you qualified for before that death or before that divorce. So your homestead exemption in Texas is going to give you a $40,000 exemption on your residence from your school district. So that's pretty significant. And then it allows any other taxing unit who adopts the local option to give you those exemptions. They can exempt up to 20% of a property's tax value, but it can't be less than $5,000 according to the current tax code. Let's talk about the over 65 exemption. I qualify for that. As soon as you turn 65 in that year, you qualify for an over 65 exemption as long as you already have a homestead exemption. And it does some more things for you. It increases the school tax exemption by another $10,000. It limits school tax increases. It sort of caps the increase at where you are when you turn 65, and it'll never go up. And that's wonderful because I'm not planning on having any more kids and sending them to school. So it's really not fair to charge those over 65 increase your school taxes every year. It also gives you the option to defer all of your property taxes until you sell the property. So if you're destitute, if you're on a fixed income and you just can't afford high property taxes, this does allow you to defer those until the property changes hands, either at your death or you sell it. I really don't recommend this because you're basically, the appraisal district is loaning you money at some interest rate, and when you finally dispose of the property, you're going to owe all of those back taxes and all the interest on the taxes that you deferred. So I don't recommend that. If there's a way you can avoid it, you should do that. So to qualify for the over 65, first thing is you got to have a homestead exemption. You have to be over 65 in the year you claim the exemption. And once you've claimed it and you have it, you never need to renew it as long as you own the property. So it's kind of like the homestead. If there's some kind of a change in deed, the county will take that away from you, but you can apply to get it back if it was due to a death or divorce, as long as it wasn't just a sale of the property. But once you sell the property, you need to go apply for the new property. And the good thing about the over 65 is, let's say I was getting a 75% discount on my school taxes in my old property because they had been frozen. When I go to the new property, I'll get the 75% discount there. If I port that over 65 exemption over to the new property, I'll still get a 75%. Now, it won't be the same dollar amount because each school district may have a different tax rate and a different tax amount. But let's say your taxes, your school taxes in the new school district that your new house is in are $1,000 a month, and you had this 75% exemption that sort of capped your school taxes, then you'd only pay $250, I said a month, but I meant a year, $250 a year of school taxes in your new dwelling. All right, how to apply for the over 65? Get the form from your county appraisal office, your county appraisal district. Make sure you apply by April 30th for the tax year, and you don't need to refile every year. You do that once, and as long as the property does not change hands, you're covered for as long as you own that property. Another exemption that works pretty much the same as your over 65 exemption is the disabled exemption, very similar to the over 65. And what it does for you is it can reduce your property tax just like the over 65 did, but you don't have to be over 65. To qualify, you have to meet the Social Security Administration's test for disability. The county appraisal district is going to ask you to provide some evidence that you have a medically determined physical or mental impairment. It must prevent you from engaging in any substantial gainful activity. In other words, you can't work or you can't do something else to earn money. And the impairment has to be expected to last for at least 12 continuous months, or it's going to result in death. So if I get Alzheimer's and can't do these videos anymore, I could probably qualify for a disability exemption. And if I have Alzheimer's, that's going to be with me until I die. So once I apply, it's going to be good until I pass. If I pass away and my wife, who's not disabled, still living in the house, she continues to qualify for both the homestead and the over 65 and the disabled exemptions. So all those continue then for surviving spouses. Another popular exemption in Texas, if you own a lot of land, is you can get an agricultural or a wildlife appraisal. I have friends that have bought ranches where they like to go hunt, and they qualify on those ranches for wildlife appraisal. That significantly reduces the property tax that they have to pay. Basically, it changes how the land is appraised from market value to economic value. This also applies to timber exemptions. So the economic value is what can that land earn either in agricultural production or as wildlife sanctuary or whatever. So you can imagine that if you have a wildlife exemption, your earnings are going to be fairly low compared to maybe an agricultural use of that land where you're producing crops or livestock. Now you need to have, to qualify for the wildlife or agricultural appraisal, get the forms from your county appraisal district, and they're going to do what's called an intensity test. That is, let's say you're raising corn and you have 400 acres of corn and you're getting like 100 bushels per acre every year, then that would determine the economic value of your property. Let's say you claim you're only getting 10 bushels per acre. Well, they would compare that to other properties in the county and say, hey, wait a minute, Mr. Johnstone, your intensity of use is not consistent with what we're seeing everybody else do. So you have to pass this intensity test. Again, you apply for these by April 30th of the tax year. Once you've got them, you don't need to refile every year, but you do need to maintain your agricultural use of the land. I got some bad news for your horse owners. If you are using your ranch for only recreational, that is, I raise horses, I ride around the land, you're not going to qualify for an agricultural exemption unless raising horses is your business and you buy and sell horses every year and use this property for that. But if you're just using it for recreation, sorry, you don't qualify. You have to pass an intensity test, so there's a use. It has to be devoted to agriculture or wildlife. It has to be used in the appropriate intensity consistent with other properties in that county. And it has to pass a time test. That is, we're looking at 2 out of the last 3 years or 5 out of the last 7 years. You were using this property for wildlife or agricultural purposes. So again, get your forms from the county appraisal district, apply by April 30th, and enjoy the agricultural or wildlife or timber. Are you a veteran? If you're a veteran, first of all, thank you for your service. If you're a disabled veteran, you can apply for a disabled veteran exemption, and it's going to lower some or all of your property tax. It could reduce your property taxes all the way to zero if you're the surviving spouse of a veteran who was killed in the line of duty. Texas is very, very generous with its veterans in terms of property taxes. So if you're a disabled veteran or you're the spouse of a deceased veteran, you need to look into applying for the disabled veteran exemption. To qualify, the disabled veteran or their spouse has to be living on their own property. In other words, kind of the same as a homestead exemption qualifying in that regard. If somebody was killed in the line of duty, they should get a full reduction. Otherwise, a percent reduction is determined by the percent of disability that you have as determined by the U.S. Department of Veterans Affairs. So again, if you're a disabled veteran or a spouse of a disabled veteran or a deceased veteran killed in the line of duty, this is a very, very attractive exemption for you to get. It's going to help you a lot. If you're a first responder, let's say the spouse of a first responder, all surviving spouses of deceased first responders who are killed in the line of duty and living on their own property and have not remarried qualify for 100% exemption. So if you're the spouse of a police officer or fireman or paramedic or some other kind of first responder, and you have not remarried and you're still living on the same property, you can apply for 100% exemption from property taxes. Again, that's pretty generous, I think. You would just go online to your county appraisal district, get the proper forms, fill them out, mail them in, and they'll take care of you. Disaster exemption, what it does is it temporarily, so for a small period of time, it reduces your property valuation. It's got to be property you own. It has to be located in an area affected by a disaster, and the exemption you get is determined by the percent of the property destroyed. So hurricanes and tornadoes are something that we have frequently in Texas. If you live in a disaster area that was affected by one of those, you can get a property tax disaster exemption based on destruction to your property. Let's say it blows the roof off, knocks the walls down, and your house is a total loss. You can take that property tax valuation down to just the physical square feet of the property itself. You don't have to pay for the house and the improvements on it because they're gone. It has to be property you own. It has to be located in an area affected by a disaster. Could be an ice storm, a hurricane, a tornado, anything like that. Could qualify you for a disaster exemption. Now, it's not forever. It's for a limited period of time. So the presumption is you're going to repair your house and you're going to restore it back to something that's usable. If you choose not to do that, then basically the tax on the improvements on your property will go away. You would demolish everything and remove the debris, and you just have land left. So you have land value and improvement value determine the total market value of your property. Okay, so I covered a few of the more common exemptions you can get if you live in the state of Texas. If you need to learn more, go online to your county appraisal district website and look for exemptions, or go to the comptroller's website, the Texas Comptroller, and search for exemptions. A lot of good information on there. So in summary, exemptions lower the value that can be taxed. They're very easy to apply for if you qualify, and you can get the forms online from your county appraisal district. Well, I hope this helps you lower your property taxes. In my next video coming up, I'm going to teach you how to do a property tax protest.